Oh, hey friends, I am here today for a quick video in the makeshift office. I'm still getting everything put together after our move. I feel for everybody that have helped buy a house recently who's had to move. It is a process, and we're still in the middle of it, but we're getting there and we're making do with what we got. So I wanted to do a video today on probably the most common question I've been getting recently within the last 3 to 6 months based on interest rates and all the conversations we're having about what that means long-term and refinancing. So for those of you who don't know, I'm Sam Newman. I'm a Denver real estate agent. If you have any real estate questions or would like help with something, I would love for you to reach out. My contact information is below in the description and probably in the comments. I usually put it there too. So what's the question? The question is basically, okay, refinancing, is it really that easy? Because here's what we always say. One of the reasons that the market is softening and becoming much easier than it has been for home buyers is because of interest rates, right? These rates have risen quite a bit in the last 6 to 9 months. Now, they're still historically at pretty good levels, but they've shot up from the high 2s to now into the 6s in some cases, depending on your particular loan. So obviously that is affecting buyer demand. But the good part is that it makes it easier for buyers. I just bought a house and I took advantage of those market dynamics to get into this. Now, did we get a good interest rate? No. Compared to what we've had the last couple of years, it's awful. But this is what I've been telling people, and this is what you hear a lot. Just get the house, take advantage of the market dynamics that allow you to get the house, and then worry about the interest rate later in terms of a refinance. Because when the interest rates drop, and they've already dropped a little bit from when we bought our house a few months ago, well then you can eventually just refinance. You can refinance down to that lower rate, unless they never drop, which seems unlikely. And if that's the case, well, this is the best rate you're ever gonna get, so you might as well lock that in too. But then the question is, okay, well you keep saying this, just refinance, all you gotta do is refi. Is that really that easy? Fair question, and the short answer is yes. A refi is actually really straightforward and simple. It's much simpler than the original loan to purchase your house, at least the way I look at it. So what you're gonna have to do, you're gonna have to upload some documents, some pay stubs, some W-2s. There's gonna be a little bit of annoying uploading and providing proof of your financial situation there. And they are going to do a credit pull. They're going to check your credit again. Now, your credit is probably just checked. You probably just uploaded these documents. So if this is something where, oh, you're going to refi within a year or 2 years or something like that, all this should be something that you would have just done. So you're probably going to be prepared to do it. You'll probably have those documents at the ready. And if you're working with the same lender, a lot of this stuff is not going to be too difficult. So there's going to be a few things that you'll have to do for the refi, and then that's basically it. Like I said, it's much easier than applying for a mortgage the first time. The other part of this is paying closing costs. You do have to pay some closing costs. Are they generally as much as the first mortgage? No, not at all. The estimates I've been getting recently, depending on the size of the loan, is something like $2,000 to $3,000 per new closing cost. But the nice part about a refi is they can really roll that into the loan. So you're not having to pay that money out of pocket. They roll it and you pay it over time. So, okay, this is gonna cost me a few $1,000s. Is that really worth it? Well, if you're saving quite a bit on the mortgage rate, it's gonna be worth it very soon. For example, if it's the difference of 1 percentage point, which is significant, and by the time you're refining, it may even be more than that, but 1 percentage point is kind of that line where you go, okay, this is gonna make sense to refi. Well, you, on a $500,000 house with, let's say you put 10% down, those monthly savings are going to be in the neighborhood of $300 per month. So you're going to make back that $2,000 to $3,000 pretty darn quick. And forget over the life of the loan. Over the life of a loan, a 30-year mortgage, you're going to be saving tens of thousands of dollars, more than that even, depending on how long you hang on to the house. So that's a quick rundown of how it works. Refis, are they insanely easy? Maybe not. Are they pretty darn easy? Yeah, it's a pretty straightforward process, and your mortgage loan officer will handle the rest. And if you need some good recommendations, I have them for you. Hit me up, let me know, and I can find you someone that'll answer your questions and help you determine if it's the right time to refi for you. That's it. I told you it was a quick one. Let me know if you have questions. I appreciate you watching. As always, I got to get some stuff up on the walls. See ya.